The street says a short squeeze could be coming. Now, I like the street because they don't tend to take a biased view, whether it's to the upside or the downside with AMC or any other stock. For a quick example here, we were talking about one of the street's articles about a short squeeze before you seen this last rally in early November that did come to fruition very shortly after that article was put out. So I do think they have a little bit more credibility than a lot of other news outlets, and that's why I do like to kind of pay attention to what they have to say on AMC a little bit more. And obviously it's Wall Street memes, they focus on meme stocks, so take that into consideration, but they do tend to be right more than they are wrong, guys. So let's get into this article. You guys know the spiel. Hit that like button, subscribe to the channel if you guys like this video or you like these kind of videos. It says AMC stock is getting harder to borrow. Could short sellers be in trouble? AMC stock closed out the year with yet another gut-wrenching drop. Significant bearish pressure has caused borrowing fees to skyrocket. Could this become a problem for short sellers? The key points. Movie theater chain AMC suffered from strong selling pressure during the last days of 2022. As a consequence, AMC's borrowing fees skyrocketed. Borrow fees are mostly driven by supply and demand. The more short sellers are interested in borrowing the stock and the lower the availability of shares, the higher the fees. The abrupt increase in AMC borrow fees can force short sellers to close out their positions. What hard to borrow really means. Short selling is accompanied by borrowing an asset, usually a stock or ETF, from a broker and then selling that asset on the open market. However, brokerages charge a fee to allow short sellers to borrow shares for shorting. That fee is affected by several supply and demand factors. Typically, borrow fees range between 0.3% and 3% per year. However, when there is a high demand for a short sale target, it is not uncommon to see borrow fees exceeding 20%. When there is exceptional interest in borrowing an asset in order to bet against it, the available borrowable pool of that asset shrinks. Borrow fees to take from that pool increase, and the asset becomes more difficult, example, expensive to short. Some financial studies have shown that expensive to borrow stocks typically have stretched valuations and low future returns. In other words, stocks that short sellers choose to focus on are indeed often overpriced. However, when borrow fees jump dramatically, they can presage a short squeeze. Short sellers now losing money due to skyrocketing borrow fees can be pressured to close their positions and realize their remaining profits, especially before other short sellers choose to do the same. This scramble to close out positions creates upward momentum on share price and can spur a squeeze. What AMC's borrow fees show. We can see that AMC's borrow fees, according to data provided by Interactive Brokers, currently stands at an incredible 113%. Since the beginning of October 2022, AMC borrow fees have been hefty. They have sat at roughly 18% on average in November. However, after AMC released its third quarter earnings results, fees shot past 100% before dropping and stabilizing between 30 and 40% by the end of December. The latest abnormal climb in borrow fees at year end was probably prompted by a severe bearish reaction to AMC's plans to propose converting its preferred shares APE into common stock. This plan, if it goes through, will have dilutive consequences for AMC's flow. However, when borrow fees exceed 100%, shorts could be particularly threatened by a sudden bullish mobilization of traders and retail investors. With borrow fees in the stratosphere, any upward pressure can cause a chain reaction that prompts shorts to scramble to close out their positions. Short squeeze setup in the making. Market sentiment surrounding AMC is probably at its most bearish point in the past 2 years. The latest short interest figures indicate that 21% of AMC's float is being shorted. As of early December 2022, there were approximately $771 million worth of AMC short positions. Importantly, according to some experts, the coercive factor for short squeezes is not necessarily the percentage of the float being short, but rather how much short sellers' money is at stake. Data from S3 Partners research indicated that AMC short sellers pocketed about $1.73 billion in year-to-date mark-to-market profit by early December. And given that AMC shares plummeted 50% in December, short sellers probably made a significant amount even in the last few weeks of the year. This implies that for the time being, short sellers probably have fat profit margins they'll need to burn through before very high borrow fees start taking a real toll. Therefore, a significant short squeeze in AMC stock to occur in the short term, a significant buying catalyst will be necessary, one that can mobilize retail sentiment and awaken a relevant buying force. AMC's management's intuitive to perform a reverse stock split could be such a catalyst in the near future. AMC's shareholders will need to approve the proposal, which has already been interpreted by many as a fairly desperate maneuver made by a company in financial distress. So you see how they're kind of neutral on things. They didn't really end it off on a super bullish note. They do acknowledge when things are bearish or when it's not really affecting the stock in a bullish way, and that's a huge reason why I do like the street. But overall, you can't deny what they're saying is 100% the truth. Shorts, they do have profits on AMC, and those cost to borrow rates, they're not coming down, and they're not coming down, so they are affecting, hedge funds and how much money they have made on the stock, thus making it a little bit more likely that they will cover on those short positions. If we do go ahead and take a look at the live numbers that we're currently seeing for cost to borrow rates, for short interest, all of that, let's go ahead and pull it up. You can see live numbers from Interactive Brokers as of right now over the last 15 minutes has us at about 111% cost to borrow just from Interactive Brokers. Now, the cost to borrow average is 255.58%. The cost to borrow max is 269.43%. Cost to borrow minimum 234.63%, and the live short interest of free float is 21.43%. You do have almost 111 million shares that are sold short. So the overwhelming consensus view here is that as these cost to borrow rates stay higher for longer, it does and will force shorts to get out of their short positions, especially as they have made so much as of recently. And any catalyst from here on out that's bullish is going to be essentially ultra bullish for AMC and really squeeze those shorts out of those short positions. As far as the timing on when these catalysts will happen, as far as the timing, on when the MOAS will happen, or, when these catalysts will come out in general, highly unknown. That's why right now, you definitely want to be weary of options unless you are sophisticated and you have a strategy, you have a time frame outlined. I would say before March, you're probably going to see some form of good news. Probably likely you do see some form of rally, but I'm obviously not a financial advisor. If I were to play the options on AMC, that's the time frame that I would target. But nonetheless, it seems to be the best way to always play AMC is with just buying the shares, guys, and especially because you're buying it at such a low level, you're buying it as such pessimistic views of AMC in the markets seems to be the best way to go, guys. So that is going to be it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.